Hi, good evening all.
Good evening, ma'am.
Good evening, ma'am. Good evening.
Yeah. Is my voice clear? I'm trying to adjust the volume, but no, just give me a second.
Yeah, it is clear, ma'am. We can hear.
It's clear. Okay.
Yeah, it's clear, it's clear.
Okay then. Just give me a second. Let me share my PPT. Okay. So is the PPT visible? You all can see?
Yes, ma'am.
Yeah, yes, ma'am. We can see.
Yes.
Oh, okay, fine. Okay, so let's start without delay. Okay, so today we are going to see about how to make entries in journal. Okay, so before seeing that, we are going to see about the basic things about journal in detail, little bit detail. So let's start with the difference between single entry and double entry system. Usually few companies maintain single entry system also, but it has its own disadvantages and limitations. So it's of course it's a simpler method of bookkeeping, but the debit and credit columns, it doesn't agree with each other at the end of the the accounting transaction. Whereas in double entry system, we very well know that each every debit there is a corresponding and equal credit. So anyhow, while preparing the final accounts, the balance sheet, finally the both the sides gets balanced. So it's easy for filing the tax. But while maintaining single entry system, you cannot file tax with with all the transaction which is made in single entry system. And now when single entry system is made, it is not complete at all because because of the same issue. There is no double entry system. There is no debit and credit, corresponding credit, mentioned. So it cannot be a complete record of any transaction, whether it is cash transaction or credit transaction. It is not at all complete. Whereas double entry system is a complete record of all the transactions, and not only the transactions, even the credit purchases or credit sales made. That is whatever the company is liable to pay to the other parties, and whatever the other parties are liable to pay to the company. And those things are taken into the taken forward to the next accounting period as well. Because that's not left as it is. It's not left aloof. So whatever has been recorded in the previous year, so if that is not settled, if cash is not settled, so those aspects is taken to the next year's accounting period. And single entry system as the records are incomplete, so it cannot be which cannot be prepared as the final accounts. This profit and loss account, the balance sheet, it cannot be prepared. Whereas since the double entry system have all the transactions recorded, it's very, very easy to prepare the final accounts. Okay. So this is the difference. And yeah, we will quickly see about the accounting terminologies. Okay. So capital. Capital is the owner's equity. That is the owner's funds, the original amount invested in business. Liability or the debts, that is amount owed to creditors and the claims of those who are not owners. So if the company is liable, it means the company has to pay a debt, or if a person or an organization is liable to the company, it means the person or the other company is liable to pay to the present company. And then is assets. Assets is anything of value, whether it can be tangible assets or intangible assets, including copyrights, patent rights, trademarks, even the motto object, whatever it is, whatever the company has, assets brand, so those are considered as assets. Even it is not tangible, so it has a monetary value attached to it. So that also comes under assets. Revenue is nothing but the all the incomes, like like sales receipt. So once you make the sale, so you are going to make the profit. The company is going to get the amount, get back the amount invested in selling that product. So it's a sales receipt and interest, like all the interest accrued or all the interest for the sales being. So anyhow, the company will be getting it back. So that also comes under revenue. The commission and the brokerage. Okay, so all the inflow of assets. So what happens when this inflow happens? It results in the increase in owner's equity. Anyhow, everything comes under owner's equity. So obviously the share, that is the capital share, increases. And then expenses, that is whatever amount being spent to produce or sell the goods, even for marketing purposes or for like other purposes related to the selling of the goods and not any other expenses. Okay, so related only to the selling of goods or production of goods or procuring the raw materials. So everything done, so that comes under expenses. And there are two types, capital expenses and revenue expenses. Capital expenses, it generates the revenue over several accounting years. So it will go on. So it cannot be limited to one particular period of time. So once the company, once the owner has invested something on the company, so year on year on, he or the she, the person will be reaping the benefits out of that capital. So it goes on, several accounting years it goes on. Whereas revenue expenses or something, it generates, which is being generated only during the current accounting year. So that revenue, if it is like above the capital which is being invested and above the expenses which is being made, so that is considered as profit to the company. And then the debtors, the person who receives the benefit without giving money but liable to pay in future. So again, if the company is a debtor, it means the company is liable to pay to the other person or other supplier or to the bank or to the other organization. In other case, if the other person or other organization is liable to the company, it means they are anyhow they have to pay back to the company. And creditor, whoever gives the money value or money, so without getting the cash, immediate cash, so they are creditors. If immediately the cash is being paid, so there is no creditor or debitor, because everything is settled when there is a cash payment made, when there is a cash purchase made, or when there is a cash sales made. So there is no accruing of the accounts, accruing of the transaction. So it is settled then and there. Only when there is a credit purchase or credit sales, it becomes accrued to the next accounting period. Then is drawings. Drawings is something, like any amount withdrawn by the owner, from the capital, from the company, is considered as, drawings. So this drawings amount would be, subtracted from the capital which he or she has invested in the company. For example, a person has, invested, as a capital, he or she has invested 10 crores. So after some time, the person has withdrawn 2 crores from the company accounts. It means the present capital which will be shown in the accounts will be for 8 crores. And finally, purchase and sales. So buying and selling of goods or services for the purpose of resale and revenue. If a cash purchase is made or cash sales is made, and it's considered as, it comes under cash account. It doesn't come under purchase account or sales account. It directly comes under cash account. Only if there is a credit purchase or credit sales, then it comes under the purchases and sales account. Clear?
Yes, ma'am, clear.
Oh, good. So we will move on. Okay. Now, we are directly coming to journals. So first, let's understand the basic things about journals. So, like in journals, like which is considered as the first book, book of original entry or first book of entry. All the transactions are recorded in chronological order, that is date wise. That's why it's considered as like the historical data. It's a document for maintaining the historical data of the transaction. So historical data means everything should be in the chronological order. Okay, so journal's first rule is record the transactions in historical order. And every record of the transaction is accompanied by a narration. So not only the transaction is not like specified or mentioned in the journal document, but a small narration for the transaction is also written or entered along with the transaction. Why? Because to make clear to the any person who takes a look on the accounting books or who takes a look on the journal, so easily they will understand like how it is done, why this transaction is being recorded here. That's why every transaction it always is accompanied with a narration. And finally, the recording in the journal is called journalized. So from journal, all the entries or like all whatever the entries are made in the journal, that is taken and posted in ledger. And from ledger, the company very well can directly go and prepare the final accounts, which is profit and loss account and balance sheet. Okay. And in case if the company wants to know the present situation, that is the present financial position of the company, in those cases, they can prepare the trial balance. Otherwise, it's not necessary for any company, to prepare the trial balance. Once the ledger entry is ready, no, which is made out of the journal entries, so they can very well go ahead and prepare the profit and loss account and balance sheet. Is it clear?
Yes, ma'am. Clear.
Okay. So the functions of like journal. So analytical junction. It performs the analytical junction. That is again like corresponding credit to every debit and corresponding debit to every credit. So there is a balance in the transactions. If no, finally, when closing the account, if any of the balance is like any of the transaction is imbalanced. For example, credit has been entered, but there is no equal debit. So it's again taken into the next accounting period. Maybe the next day or next first day of the next week, or it may be the next month or like next quarter or next year. And it does a recording function again for each and every entry. A narration is also being made to give a clear idea why the transaction is being entered in that particular journal. And again, historical function. So, it records everything in chronological order. So these main functions, the journals, it provides, and it's the no responsibility of the accountant or whoever is the person responsible, whoever is responsible, like making the entries of all the transactions, to maintain this strictly. Because if any of this, like if the chronological order is not maintained or if the person has missed out any corresponding credit for debit or corresponding debit for credit and missed out any narration part for any particular transaction entry, then that becomes a problem while while posting all the entries to the ledger. So posting on the ledger would be a very difficult task if these three aspects are not. And steps in journalizing. The first step is first study the business transaction. Understand why the transaction is being made, whether it's a cash transaction or purchase or some kind of expense related to the sales of the product or expense related to the running of the smooth running of the management, day-to-day expenses, or no, like if you know, like any commissions or no brokerage charges being paid or received, and any interest rate being no, like received from the banks or being paid to the banks while paying back the loan. So understand the transaction first, and then always look at the transaction from the business point of view. That is, if you remember that we know, like read about few principles, accounting principles. So there, the first one is uh, the business is not seen as a different entity, a separate entity. So owner's account and business account are not confused or not no, like mixed with each other. Owner's account is something different. That's his personal account, her personal account, and company's account is, even if both the accounts are maintained in the same bank, we have no like accounts in the same bank. So that is separate. This is separate. So always you have to, any transaction, no, like while you're making, while you're recording, you have to see it in the business point of view. Even if the owner has withdrawn the, no, like some amount from the company's account, so it should be, mentioned as drawings account. So it can't be, like taken into, in a very light manner, because we cannot think, like anyhow it's owner's money. So he or she has all the right to withdraw it. Of course, no, yes, there is a right, but it has to be, like recorded. And apply the rules. Always apply the rules. Identify the accounts involved in the transaction. Identify all the parties. For example, if a credit purchase is being made, so here, who are the parties involved? The company is involved, and whoever has purchased, so whoever has supplied the material to the company, that person is involved. And the nature of transaction, that is a credit transaction. It's not the cash transaction, that's a credit. So here you have three, no, it's like three persons or three aspects being involved in case of credit purchase: the company, the supplier, and the nature of the transaction, which is a credit transaction. So we have to identify the nature of the accounts, and then you have to make the appropriate entry. Then apply the rules, and finally journalize the transaction. So only if journal is no like entry is proper and no like correctly maintained, it would be easy to know like copy all the transactions, or no like transport all the transactions in the ledgers. Okay, so finally, like we are going to see about one simple example. So how journal entries are being made. So can anyone understand? I think few BCom, commerce students would be there, account students would be there. Can anyone like identify, or you can know like explain at least two, three transactions, which is being recorded here? Can anyone volunteer?
Example, petty cash, daily expense, like we are buying something like that. Real account.
Uh, I'm asking about the first entry in the slide, what you're looking at.
This is to establish a company, for example.
Mhm.
I think cash as capital and cash in the bank.
Okay. So this is the date where the business has like started, right? So the owner of the company, okay, Messrs. M, okay, the owner of the company M has invested a capital of how much? 5 lakh. So the parties involved here are the owner, the cash, and the cash is considered as the capital. So it is written as cash account debtor. So why it's mentioned as debtor? Because the company is the debtor here. The company has received the money from the owner. So the owner is the creditor here and the company is the debtor here. So that's why it's mentioned as cash account debtor to capital account. And then comes the narration, being business started with cash. So this narration, it helps in understanding the entry being made. And then you can see, there are 5 columns. So always journals are maintained as, like in 5 columns. First comes the date. So that, like in chronological order, it's maintained. Then comes the particulars. In particulars, you can, have to mention the nature of the transactions and then narration. So narration is always, like mentioned within the brackets. And then is the ledger folio column. Ledger folio column is, so in the ledger, so where this transaction is being posted. So that page number would be, like mentioned here. The ledger's page number where this particular transaction is being entered. That page number would be here. And then the amount. So what is the debit amount here? That is from the company side. It's a debt. So anyhow, the company is liable to pay to the owner if in case, it's closing down its operations or, for any reason, or if the company, if the director of the investor wants to withdraw the whole of the capital, the company is bound to pay back. Okay. Here we are seeing owner as a different entity and business as a different entity. So that's how you should see the transactions and the accounts. So company's debit is 5 lakhs and owner's credit. That is again 5 lakhs. So if you can see, just to cash account debtor, in debit column, it's written as 5 lakhs. And the next line to capital account. So in the same line, here the same amount. That's it's mentioned under credit. So this is the debit the debit information, and the next line would be the credit information. Clear? And let's see the next entry. Furniture account debtor to cash account creditor. So here we can see being furniture purchased in cash. So that there is no credit purchase, it's a cash purchase. So while posting this on the ledger, it would come under the cash column. All the cash transactions would come under the cash column. So furniture account is debtor and to cash account is creditor. And then purchase, being goods purchased on credit. Here you can see there is no mention of cash anywhere. So just mention this purchase account debtor to N account creditor. It means to company N. So from company N, this organization has purchased some products worth 1 lakh rupees in credit, on credit, not in cash. Okay. So it's a purchase transaction. And this doesn't come under cash transaction. And then see the next entry. Rent account debtor to cash account creditor. Okay. So obviously rent has to be, paid as cash. Either as cash or either as could be given as a check or direct, bank transaction has to take place. Okay. So rent account debtor to cash account creditor. And then here, sales being made in cash. That is, sales has been done and the cash has been received immediately. So there is no credit sales. Okay, so immediately the receiver who has purchased the product from the company has paid the corresponding cash to the company. So the income has been already received. So it's mentioned as cash account debtor 18,000 to sales account creditor 18,000. So it's equally balanced. So if you can see, all these transactions till the 5th one, it's equally balanced. And then coming to 6th one, see, cash account debtor which is 13,500. Discount allowed debtor. So when a sales is being made, you're giving a discount to the party who has not purchased your product. We have to mention that discount also as like a separate column as a separate entry. So that's why you have mentioned here discount allowed. So 1,500 is like discounted. So the total worth of the product is which is being sold is 15,000, whereas the person or the organization which has purchased the cash, like purchased the product by paying hot cash has paid only 13,500. Why? Because 1,500 has been discounted for him. So that's why you can see two entries here. Again, you can see if you add this, it comes to 15,000 and corresponding entry in the credit column 15,000. So again, it is balanced. And then the bank account, that is cash deposit into bank. Here the bank is considered as debtor, and like the company is like in a cash point of view is considered as creditor. So 10,000. And to N accounts, to cash account. So here we have seen that we have made the purchase from N. So there is a credit purchase done. So now we are paying back to N. So initially you have paid 20,000, but no, you have purchased 1 lakh worth product from N, company N. So out of 1 lakh, you are right now paying 20,000 here. So N's account debtor to cash account creditor. Being creditor paid off. And then the drawings account. So drawings here means the owner of the business has withdrawn an amount from the company accounts and in cash, not as shares, but in cash. So drawings account debtor to cash account creditor. And then finally, salary account. Like expenses. Like salary and all, it comes under expenses in real accounts. No, in nominal accounts. Yeah, nominal. So salary account debtor to cash account, because since salary is being paid as cash, so no, it's mentioned as to cash account creditor. So if you can see, all the debits has equal corresponding credit. So there is no mismatch at all. Even in this column, that is the discount allowed column, if you add up this amount and this amount, so it equals the 15,000 which is mentioned in the credit column. So this is how journal entries are being made. Is it somewhat clear?
Mom, how it is happening? Exactly the same amount will coming, incoming and outgoing. How come it is same? For example, this
No,
for the
we are
clarification.
we
If you're
are
no, if you're
making as the same entry.
no, for example, if we are going purchase something to outside in the market, correct? We supposed to have at least 10,000. Then only we can go at 8,000 items or something like it. It's not like that. So exactly how come tallying that amount? So 8,000 only we are take withdrawing money. But honest example, you showed that honest drawing that 2,000,
Drawings
correct?
account, yeah.
Yeah, then how come it is exactly that he's spending only that 2,000? He couldn't able to spend approximately 1,500 or 1,000 word. It's not like
I
that.
mean, whatever he is spending on his own, that doesn't matter. He has withdrawn from the company's account 2,000. So with that
Okay.
2,000, it's his problem. No, he's like whatever he wants to do with that money, that's his problem or his wish. So, but from
Okay,
no
okay, I
business
understand.
point of view, yeah, from business point of view, if you can see, owner has withdrawn 2,000 from the company's account. So that's how you have to see it.
Yeah, I understand. But
Yeah, yeah. He can purchase whatever he want to purchase or no do whatever he wants to do with the money. So that the company is like I mean least to bother about, we don't have to have that information. So from company's point of view, owner has withdrawn 2,000 from his capital. That's it. Or owner has invested this much amount as a capital. Okay, that's why no, we
Oh,
have seen
okay.
each transaction has to be seen as business point of view, organization's point of view. Yeah.
Yeah, got it, ma'am. Got it.
Yes. So let's have a small exercise, no, like to make sure, no, you have understood the at least no few of these things. Don't worry, like in the very first class, nobody would understand, no, like it's very difficult. Only few account students, no, who have done accounts or no, like taken accounts as their, no, like say higher secondary, one of this higher secondary subject, they can easily understand. Others don't have to know confuse or worry. We can know have at least know like 5 to 6 illustrations like this. So you will be know like clear about what is a journal entry, you know how to do with the journal. Okay. So again, this is for your exam purpose. So now no company does any physical documentation. Okay. So the ledger or the no like final accounts, how to prepare final and profit and loss account, the balance sheet, trade trial balance, everything, whatever you're studying here, it's for the exam purpose. So understand the concept and try to know like work out all the illustrations and the problems. Okay. But almost all the companies now they have no like special accounting softwares. All you have to do is no first post the journal entry. If journal entries are correctly posted, automatically the software would not take those entries to the ledger format and prepare profit and loss account or trial balance or balance sheet on its own. You don't have to know like I mean break your head at all. Clear?
Clear,
Initially it
ma'am.
was no like yeah,
Yeah, yeah,
initially it
clear.
was there was a software called Tally around 2005, I think so. Yeah, Tally was a software. Yes,
2009.
for accounting purpose. So even no the first version of Tally, no like only journal postings were made in the software. Okay,
Yeah,
so
of course.
accordingly, again, narration part, date-wise, chronological, everything was maintained. But no, the accountant or the person responsible has to post only the journal entries. The software took care of no everything, and it prepares the trial balance by itself. So from your point, that is no from the accountant point of person who is responsible. So what that person has to do is, after no the software has prepared a trial balance, just know he or she has to cross check whether all the entries are being correctly made in the trial balance. That's the only thing. In very few cases, no, like sometimes the system would, the software will make any mistake. But otherwise, no, like it was pakka. It was no like more than enough. No, it actually, it no like minimized, the effort of no like carrying bundles of ledgers and journals. Now we have no like ERP systems, enterprise resource, like products or no like process, and accounting no has become a part of ERP, not the complete ERP. So it has become a part of ERP. So it contributes only no like to some portion of ERP. With ERP, you can maintain accounts, you can maintain your HR department, you can maintain your sales and marketing department. You can even give forecast on whatever you have, no, whatever accounts it has prepared. Based on that, it can even give you a forecast of how a product will be, no, product sales will be in the next 3 months or 3 years. So that advanced systems and no softwares, no, like right now they have come. Okay. And whatever you're studying here in this class, online session, it is completely for your exam purpose. Okay. You have to understand the basic of all the transactions. So why it is done, where it is done, why, what is the purpose of no of this no transaction being entered in this particular form. That's it. Yeah.
Yeah, ma'am.
Okay. Let me give you an example. Uh, So what I will do is, I thought of preparing few entries, but I know I have very limited time. I couldn't do that. What I'll do is, I'll mention, no, like at least 5 to 6 entries, I mean 5 to 6 transactions in a sentence format. Okay, just you can know like sorry, you can know, just give me an idea of how that would be posted on the journal. Clear?
Yeah.
Yeah. Okay. Fine.
Yes, ma'am.
So yeah. So the first entry would be I would say, like a question may like come like in your question paper. Journalize the following transactions. The first one would be, Mr. Gupta commenced a business with 2 lakhs. So how that would be posted in the journal? Mr. Gupta commenced a business with 2 lakhs.
It will be the
The capital.
same.
First is the cash account debtor, right? Cash account debtor. So in the debit column, it would be 2 lakhs, and then comes to capital account creditor 2 lakhs. In the credit column, it would be written as 2 lakhs. So just like check on the first entry in the slide. So here is mentioned as cash account debtor to 5 lakhs and to capital account debtor, capital account creditor 5 lakhs. So same thing, only thing is it becomes 5 lakhs will become 2 lakhs. Clear? And you can like mention here in the journal of like Messrs M, instead of Messrs M. Now we have got a name, right? Mr. Gupta. You can know like Mr. Gupta and Company or Gupta and Company. Got it?
Mom,
Yeah.
if Gupta has given the 2 lakhs, correct? Yes, we put it on the credit. Again, why we are put it on the debit? We supposed to be put like that. That is the follow-ups. If example,
Yeah.
he given
In the business point of view, now it's a debit received from Mr. Gupta. The business has received a loan. It's kind of a loan from Mr. Gupta. So the organization has to pay back to Gupta at any point of time.
okay, that's why, because that's why we are showing that the credit and debit is always supposed to whatever is paying the amount, we supposed to put it on the credit also.
Yes.
Or in the debit
Here
also.
Mr. Gupta is a creditor. Gupta is paying. Gupta is paying to the company, to the starting, like to the start of the company. So Gupta is seen as the creditor. Here the company receives Mr. Gupta's amount. So company is seen as the debitor. Yeah. Okay. The next, yeah. So the next transaction would be bought goods for cash 10,000. Bought goods for cash. Bought means it's a purchase, right?
Purchase.
Yeah. Bought goods for cash. It's a cash purchase.
Cash credit, purchase debit.
Ma'am, purchase account to cash account.
No, first cash would come. Cash account debtor to purchase account creditor. It's a cash transaction. Yeah, it's a cash transaction.
Yeah, ma'am.
So if you see that from the company's point of view, the purchase, the products have come, but cash has gone out.
Yeah, goes out.
Yeah, yes. So it's cash account debtor to purchase account creditor.
Yeah.
Okay.
Yeah, ma'am.
And then sold goods to Kareem on credit 6,000. Sold goods to Kareem
Credit
on
account debit.
credit. Yeah. Sold goods to Karim on credit. 6,000.
Cash account is debit.
No, it's a credit. Credit. Oh, cash will not be mentioned here. You have no like sold the goods on credit.
Sold sale. Like this sale now.
Yeah.
Yeah. So maybe sale. So cash account is coming like this. Sold debit, cash is credit.
No, again, cash will not come. It's a credit sales.
Okay.
It's a credit sales. If there is a credit sales or credit purchase, there is no there is no way for cash here.
Okay, ma'am.
Yeah. So how it will be?
From debit to sales.
Debit to sales. Okay, two sales is correct. Yeah, two sales is correct. So in the debtors column, what you have to write is, since we don't know for which company Mr. Karim is working for, we can mention as Karim account debtor 6,000 and to sales account creditor 6,000. Is it clear?
Okay, ma'am. Yeah, clear.
Yeah. Okay. Because since it's a credit no sales, you cannot mention cash account debitor. Okay, you have to mention the person or the company who is no like liable to pay. So since here it is no like the goods are being no like sold to Mr. Karim. So Karim is liable to pay to the company. And we don't know for which company Karim is working for. So we are taking Karim here. So Karim's account debtor to sales account creditor. Got it? Okay. The next transaction would be purchased goods from Miami traders. Purchased goods from Miami traders.
Cash or credit?
That you have to find out. That you have to find out. Identify the transaction and let me know whether it's a cash or credit purchase being made.
Like this cash account is credit.
No. So if cash is not mentioned in any sales or purchase, always considered it as credit.
Oh.
Okay, so if cash is not mentioned in any transaction, considered is at credit. So here you have purchased goods from Miami traders on credit. So you're liable to pay to Miami traders. So how the journal entry would be?
Miami will be credit as account payable. Goods or purchase.
Miami would be the credit, yeah.
Yeah, and
The debit entry would be?
the goods or purchase.
Purchase, very good, excellent. So purchase account debtor to Miami traders accounts creditor. So in the narration, you can write as being credit purchase from Miami traders. Clear?
Yes, ma'am, clear.
Okay, that's good. Okay, fine. We can see no two more transactions. Okay, fine. Received cash from Karim. Received cash from Karim. 6,000. Yeah. Received cash from Karim. 6,000.
Cash will be debit.
Debit.
No,
Okay.
Cash will be
Yeah,
credit.
you're right. You're right.
Debit.
Yeah. Cash account debtor to
Debtors, yeah, and the account receivable will be credit, like Karim.
oh, you have to mention as Karim's account.
Yes.
Yeah. So cash account debtor to Karim's account creditor. Yes, good. Very good. Very good. Okay, fine. Yeah, just one more. Okay, fine. Paid rent. Paid rent 5,000.
Cash credit debit rent expense.
Very good. Rent account debtor to cash account creditor. Okay, good. Very good. Okay, fine. And fine. Now, like, try this one. Okay. Bought computers. Bought computers 20,000.
Purchase debit and credit will be the company that we purchase, like account payable.
Okay, here they haven't mentioned any company. They have just mentioned bought computers
So
20,000.
cash credit.
Cash or credit.
Okay.
So here again, no mention of cash, right? There is no mention of cash. And there is no mention of the individual or the company, right? From
Right.
whom the purchase has been made. Yeah? Is it right?
Yeah.
Yeah, okay.
Yeah, ma'am.
So, yes. So in this case, you can mention as computer account debtor to purchase account creditor. Computer accounts debtor because the company is liable to pay, because it's a credit transaction, because there is no cash mentioned in the transaction. Okay, to purchase account creditor. We don't know from whom we have purchased, that is not mentioned here. So simply write to purchase account creditor. Clear?
Yes, ma'am.
Clear.
Yeah, okay, fine. So what I will do is, since I have missed out this particular portion, I will just make it as a Excel sheet, okay? Or Excel sheet, I'll make all the entries. First, I will start with uh, the the transaction details. Then I will show you how it is being posted, as a journal entry. So if you can see an example, it will be very easy to understand. Okay. So I'll do that, and then I'll forward it to the representative and I'll ask her to forward it to you guys. Is that okay?
Okay, ma'am. Okay, ma'am.
Yeah. Okay. So next week, we will have no more illustrations. At least we will go with 2-3 illustrations. So you will be very good with all the journal entries. If you're good with journal entries, you don't have to worry about ledger, balance sheet, balance. Clear?
Yeah, ma'am. Okay. Yeah, clear.
Yeah. Okay. So any doubts you guys have?
No any doubt.
Okay, fine. Okay, then see you next week. Have a great weekend.
Okay, ma'am.
Thank you, ma'am. You too.
Thank you. Bye.
Thank you.
Thank you, ma'am.